of Adrian Day Asset Management joins us now. Why the softness in gold?
Well, I think you have to put the softness in context. We had a big jump in gold, 2 weeks ago, 3 weeks ago after the bombing of Syria. And we've really just retraced from there, maybe a little bit more, but markets always retrace a little bit. So I call it softness, but I certainly wouldn't call it much more than that. But of course, you also have the Federal Reserve talking about the economy stronger than it appears. We might raise interest rates in June. So that certainly puts gold under pressure.
I think investors are a bit confused because they see the tensions with Russia, tensions with North Korea, issues even in the U.S. here, and they say, why isn't this creating enough of a floor for gold?
I think that's true to some extent. What I would say is, first of all, put it in context. Gold has had a good rally since Trump was elected in the beginning of November. Gold's had a good rally anyway. Secondly, if you look at geopolitical crises in the past, they tend to affect gold when they're progressive. When something happens, right, and then the next day something worse happens, and the next day something even worse happens. They also, the other factor that's very important, is when gold is in a very strong bull market and you have a geopolitical crisis such as the Iran hostage, first of all, the revolution in Iran and then the Iran hostage. So you had a development and gold was already strong. So you had a very, very strong response. You look at gold from 1980 to 2001 in a bear market, we had the Iraq war, we had all sorts of stuff that didn't affect gold.
So you're saying, look, gold's holding up here.
It's holding up, that's the important thing.
One analyst yesterday brought up the fact that gold really gets picked on or kind of beaten up on a bit.
Well, sure, when you think that the stock market's doing so well, that the dollar is up since Trump was elected, you think that they're raising interest rates. Yes, gold is doing pretty well in the face of those forces.
We had a question from the audience. Someone said that this gold chart right now has similarities to 1980 before we started, a 20-year bear market. Do you see those similarities?
Oh, no, I don't see that at all. I see much more of a parallel to 1976 when gold was at a bottom about to take off. In 1976 or 1978, whatever you want to say, but in 1976 we were coming out of a recession. We're not coming out of a recession now, but we're coming out of a crisis in 09 followed by a very, very, very weak recovery. You also have insipid inflation, which you had in the mid-70s. And from 1976, inflation went from 1.5% up to mid-double digits within 4 years. Today we've seen inflation go from under 1% last summer, under 1% to 2.9%. That's a pretty dramatic increase. So the prospect of inflation accelerating into 6, 7, 8% in the next year or two, I think is pretty high.
So Adrian, if you had to choose between gold, physical gold, or the mining stocks right now, where do you place your...
I think as an investment, the stocks are much better value right now, much better value. But I always say to people, get gold as the core, as the foundation first. I think this is a pretty good time to be buying gold. But the stocks, some of them are just ridiculous.
Which ones are you liking?
Well, actually, right now, I like some of the slightly more sensitive or leveraged, if you like. I like a Cisco Gold Royalties, the fourth largest royalty company. Pretium is very good value, and that's come off a lot. That tends to be much more sensitive to gold. So at this point, we could get a good rally in that. Some of the mid tiers that are being reduced in the GDXJ are not a bad idea. Companies like B2 Gold, although I'd wait until they are taken out.
Good thoughts, Adrian.
Okay.
Thank you so much. It was a pleasure.
You,
and thanks for watching our coverage here from the Minds and Money Conference. We'll have much more for you on Kitco.com.